Today, I want to talk about one of the most misunderstood topics in all of a tax return. And it's misunderstood because there's a gap between how we logically think about it and then, of course, how the IRS defines it. And that topic is passive income. Now, hang in here with me. I'm going to explain this to you as quickly as I can and even with an example. So, what is not passive income, I think matters. And that is if we're talking about bank interest, if we're talking about dividends, stock sales inside those investment accounts, none of that is passive income. That is portfolio income. Passive income to the IRS is if you've got a K1 from a business that you didn't really participate in, if you have a rental property, a VRBO, if you have oil and gas royalties. These types of things are considered passive income, generally speaking, in the eyes of the IRS. So why do you even care? Here's the example. If I've got a W-2 that's for $80,000 and I have a rental property and it's at empty for a couple of months and I had to put a lot of money into it and I lost $10,000 on it, I do not have an adjusted gross income of $70,000. My AGI is still going to be $80,000. And that matters because for most of us, as we're going throughout the course of the year, we're thinking about stuff that we're putting into these types of things, and then we expect to be able to deduct them in the year that they happen. That is not always true. But I do have good news for you. And that good news is if I can't take a passive loss in the year that it happens, because I have to have passive income in order to take a loss, I get to carry that loss forward each year until I have passive income, then I can deduct it. Also, if I've been accumulating losses on an activity, either a business that's losing money via the K1 or a rental property that's just not making a lot of money, and I finally decide to sell some of this stuff off, if I sell it, I can take all those losses I've been accumulating in the year that I sell it. That's a game changer, folks. That dramatically impacts and changes the tax return. So those are the two things that I really want you to take away from today's video is what does passive income mean and when can I take losses? If you have any questions, please feel free to give me a call here at the office. I'm right here in Newburgh, Indiana at Advantage Tax and Accounting. My phone number here is 812-490-9600. I'm more than happy to help in any way that I can because together we have the advantage.